How are you all doing, everyone? Welcome back to AZ Trading, and in this video it is the 15th of August on the Monday, and we're on the Nasdaq 100, and so far this is the price action that has happened, and we've managed to capture the majority of this bullish move starting from this swing down here all the way to up here. Here are the executions, and here are the execution labels. And as you can see, we've got 10% of our initial position running with our stop loss set to the break-even level. So whether this trade runs off into the moon or completely dumps and hits my stop loss, I'm impartial to my position and I'll be content regardless of the outcome. For my returning viewers, welcome back. And if you haven't already noticed, I'm using a new microphone, so hopefully the quality of the audio will be nice and crisp. So if you've watched any of my previous videos, you know that the framework that I use to trade, I call it the RMR pattern, and all the concepts that I've learnt were taught by ICT, so definitely go check him out. But I'm quite positive that all of you here know who he is. So as I was saying, the way I found this entry was by using the RMR pattern. So the first thing we look for is the raid. Just going to zoom in a bit on this chart. So for a raid, we can see that this low, as soon as it was broken through, we can call that a raid. However, immediately after, we did not see a market structure shift, so we move on to the next one. Over here, this swing low, as soon as this low was raided, we look for a market structure shift. So in order for that to occur, we need to see swing highs being broken. And as you can see, this swing high here and this swing high here, these were broken immediately after the raid. So now we've been presented this decisive bullish market structure shift. And whenever something is quite decisive, we can get a gauge of what retail is doing. So generally retail chases price. So as soon as there's decisive movement, they're going to be placing their long orders here, placing their long orders there. And before you know it, they're placing their orders way too late and they're getting a price that would be too expensive for our liking. This is basically seen as FOMO, or just the fear of missing out on the move. However, we have a very direct set of rules that we can follow, which if you follow these rules, you will never FOMO into a trade, since you will always be trading a specific setup. So the final element, the return, is just your entry technique. So whether you enter on a gap, which can be seen down here, or on an order block, which is over here as well, or even a Fibonacci, where you extend it from the bottom of the raid to the top of the shift, and you're waiting for a discount in price, meaning under the 50% level. These are just different techniques you can use to enter your trade. So you can see as price was over here, we practice due patience and we wait for the trade to return to our entry area. Meaning if price just pumps away, then our setup did not form and we wouldn't have a trade. You can call that a missed move or a missed opportunity, but I would never call that a missed trade, since our setup never formed. Whereas on the other hand, if the setup did form and we didn't take it, then that would be a missed trade. So as we scroll through price, we can see that price returns to this upper gap area. And as price does so, you're allowed to place a long, and you can never forget about your stop loss. And depending on your setup, you can have it at the bottom of the raid or the bottom of the gap. But in most cases, I usually have it at the bottom of the raid, and then you can look for objectives above. You might be wondering why I didn't place my order here. The reason for that is I was looking for a more optimistic entry, so an even more discounted price, which is in this lower gap here. So as we scroll through price, I saw this bullish reaction from the upper side of this gap, and I thought to myself, oh no, price is leaving without me. Perhaps I shouldn't have been so optimistic with my entry. However, fortunately for me, price had one more deeper retracement, and where to? Right into this lower portion of the gap to fill it completely, which triggered my limit order. So as it returned to my entry point, that's where I placed my long, my stop at the bottom of the raid, and then I look for objectives above. As you can see, the very first partial I took was at the previous day high, and you can see the second partial that I took was at this daily gap. So if you look all the way to the left over here, there's a daily gap right there. And once I took off that final partial, I've left 10% of my trade running. So overall, this is the trade that we've taken and the setup that formed prior to the move. Just want to say, even if you placed your entry at the top gap with your stop at the bottom of the raid and your objectives above, that would still be an amazing trade. I just want to leave you guys with one small tip, or more so an observation, that I've noticed in my years trading, which is to do with sentiment. This word's thrown around quite a lot and it's described in many ways, but this is just a brief outline on how I see sentiment. So let's say, for example, price is very obviously bullish, so just making higher highs and higher lows. Then the sentiment, or retail sentiment, what everyone is thinking, is that price is obviously bullish, so the sentiment is bullish. So we already know that liquidity is abundant above and below equal highs and equal lows. But knowing if there's a clear sentiment at play also gives us an idea of where abundant liquidity rests. What I mean by that is if the sentiment is obviously bullish, lots of liquidity will be resting below. So there'll be much more sell side liquidity just resting, which means it'll be a likely objective for price. So in some ways you can see this sentiment section as a Judas swing, so a fake swing. And more often than not, the real swing will happen during specific times of day, whether news is involved or it's a key time of day, etc. Let me just use the Dow as an example because this is what framed my bullish trade on the Nas. So as you can see on the Dow, before equity opened, before 9:30, can you see an obvious market sentiment? So as price moves on during the day, we have some very clean trending market structure. So the market sentiment is very clear. So when this bearish sentiment is so clear, we know liquidity is resting above and it's abundant, which makes it a likely objective. And as we know what happened during the day, that liquidity was promptly taken. And when was it taken? As soon as equity market opened at 9:30. So what I wanted to say about sentiment just before was, so for this example, we had a session that created a fake sentiment or a fake swing, which the real swing happened during a specific time. However, ignore this time frame down here. And instead of this being a session, let's say that this is a couple days of trading. So let's say this is Monday and this is Tuesday. So given that you have objectives above, on a Monday and on the Tuesday, if we see some clear bearish sentiment, you should be thinking to yourself, there's clean liquidity above, liquidity is abundant, so it would be likely for price to be bullish. That's when you think to yourself, this bearish sentiment is building liquidity above, building up buy side liquidity, and you can see, for example, later in the week, that bearish sentiment or that fake move was taken out. And you can use this logic, this sentiment logic, for any time frame. Let's say this is an entire year and we're separated into different quarters. For the first 2 quarters, they built up bearish sentiment, given that there's objectives above, and later in that year that sentiment would be taken out. And in the lower time frame, our timing factor was based on news and equity open times. When it's such a higher time frame, instead of using specific times, we can use things like fundamental data, things like seasonal reports and COT reports. Alright guys, that was a little bit of a ramble from me. I wanted this to be a quick video, but I guess it's going to be slightly longer than usual. I hope you don't mind. If you're still here, thank you so much for watching my video. And if you didn't make it here, thank you as well, but not as much. But on that note, hit that like button if you enjoyed this video or learned something new. Don't forget to subscribe, it makes me very happy. If you have any questions, leave them in the comments, I'll definitely get back to you. And as always, take care guys. Peace.